This conference will now be recorded.
Okay, so good afternoon, guys. Today we are going to discuss about the advanced concept of the Ichimoku. My friend Dinesh has already taken basic concepts on Ichimoku, and today we will dig a little more deeper, and we will explore uh, new concepts about the Ichimoku. First of all, let me tell you this Ichimoku, though it is considered as an indicator, it is not on the indicator. What I believe it is a complete system. And in this webinar, we will explore this complete system. When I say system, that means it is a completely different than a normal discretionary approach of the trading. Discretionary approach of the trading is rewarding, but at the same time that required a lot of practice to excel in that form of a trading. Uh, the biggest problem which I encountered in discretionary trading is a lack of a back testing. Suppose some guys are trading based on a patterns, let's say head and shoulder pattern, double top, double bottom, or on trend line. These patterns are very difficult to backtest. Again, within this pattern also, there is a lot of if and buts are involved. Like if somebody is using a trend line, so a trend line of one trader can be entirely different from other. That depends on from which spin point he's drawing the trend line, on what time frame he's drawing the trend line, how much angle he is considering, whether it is connecting high and low of the price, or it is connecting the close of the price. So understand there are a lot of if and buts involved in a discretionary trading. So to overcome this issue, uh, with time, I came to the conclusion if we have a fixed set of rule or called a trading system, then it is easy to trade. It is even easy to backtest. And by doing the backtesting, one can gain a confidence. When a trader is equipped with the confidence, a trading become little easier. And that's the reason I favor a systematic trading approach, and that's what we will be discussing today. So many of you must be knowing that I'm a more of a pullback trader, but there are times when I trade the breakout. So the first concept is a breakout trading. How to do the breakout trading? So I will explain you a complete system for breakout trading using Ichimoku. So this entire webinar is subdivided into a different section. So first section is a breakout trading using the Tenkan-sen. So we all know, okay, many guys has a problem that the words used for the Ichimoku trading system are difficult to remember. So I have tried my best to simplify it. So let's say Tenkan-sen. Tenkan-sen, let's for simplicity use the word. It is a Ichimoku short-term moving average. So the formula is in front of us. It's a 9-day high plus 9-day low divided by 2. That's it. A simple. Now I will use this Tenkan-sen to take the breakout trade. Breakout trade work excellent when the trend is really strong. Now when I say trend is really strong, then someone can ask how to quantify that trend is a strong one. Okay, so the simplest form to analyze the trend strength is a on basis of the pullback. Let me explain what I mean. Like, okay, here only I can explain. Okay, I will use here only. Let's say a stock is moving from 100 to 200, then it retraces back or corrects a small correction. Then again, stock started moving up. Then again, stock corrected a little bit, and then it moves up. Same way, there is one more stock. That stock also moved from 100 to 200. and then it corrected till 150. Then again it start its upward journey. Again it faced the seller and gave one more pullback. Now this out of two, can we make a guess which one is having the strong trend? Yes, it is possible. With the help of analyzing the amount of retracement or amount of pullback, which is here, this is called a pullback or retracement, one can gauge the strength of the trend. In a strong trend, this pullback or retracement will be a low degree. It will be a very small or shallow pullback. If that is the case, we can get the idea that a trend is very strong. Whereas in second chart, this is also in uptrend, but one can observe the amount of retracement is quite high. See the amount of retracement here and here. So out of two, this stock is showing a tremendous amount of strength. That means when stock reach here and a small correction is being bought, it means there are traders waiting to grab the stock even with the smallest correction. That means there is a strong demand for this stock, and such a strong demand usually give a nice breakout trade, and that's what we will do using a system trading with help of a Ichimoku. So as I explained, 1 minute. So as I explained, we will be using Ichimoku to use this breakout trade. So in Ichimoku, Tenkan-sen is the smallest short-term moving average. Now any stock, just a minute. So any stock, so here strategy is very simple. First of all, a trading instrument shall be above the cloud. The best part about the Ichimoku is it is very easy to spot the trend. A simple rule is if price is above the cloud, it is bullish. Trend is bullish. As simple as that. If a price is below the cloud, trend is bearish. As simple as that. And that's the biggest advantage, because in price action trading, many traders struggle to understand the trend, whether the trend is up or down, and they need to pay a lot of attention, higher high, higher low, and above the moving average and whatnot. Here it is very simple to identify the trend. So first, if a trading instrument is above the cloud, trend is bullish, and we will only consider the bullish trades. So for this Tenkan strategy, first thing, a trading instrument shall be above the cloud, and Tenkan-sen shall also above the cloud. Second, a trading instrument shall bounce from the Tenkan-sen line at least 2 times, and it should not touch Kijun-sen during this time. Why this condition? Because this condition will tell us that the retracement or pullback is shallow. If a retracement is bouncing from the Tenkan-sen, that means even a small correction in the stock is being bought by the traders. That gives us a hint that the prevailing trend is strong, and that's why this Ichimoku Tenkan line will be of our use. Now when this happens, when stock or instrument bounce 2 times from the Kijun-sen, take support at the Tenkan-sen without touching the Kijun-sen, it's a signal that trend is very strong and we will trade this breakout. Long above the previous swing high followed by Tenkan-sen bounce. We will see in the chart, the entry is the above the swing high level. What would be the stop loss? Stop loss below the few points of that breakout candle which break above the previous swing high, and target would be 1 times of the risk. So whatever is risk from entry to stop loss is called risk. So whatever is risk is 1x into the risk is our first target. Second target will be 1.5 times of the risk, and third is the 2 times of risk. So here is the chart. Here we can see clearly, let me take the drawing tool. Here stock break above the cloud, price is above the cloud. So first condition satisfied, it is a bullish trend. Second, not only price is above the cloud, even Tenkan-sen. Tenkan-sen is in a green line. Tenkan-sen is also above the cloud. So our second condition also met. Now observe, here price retraced back, small retracement, price took support and bounced from the Tenkan-sen. And at the same time, price has not touched Kijun-sen. That means, the demand is so high that it's not letting price to even come to Kijun. That's the first time. So this is the first bounce. After that bounce, price again started moving north, and this time, this is the second time price bounce from the Kijun-sen, price bounce from the Tenkan-sen without touching the Kijun-sen. So our all condition match here. Now what I will do, I will draw the swing high. This is the swing high. So whenever this swing high is crossed, I will go long. So this candle, above high of this candle, I will go long and see the follow through. So where will be my stop loss? My stop loss will be below this candle low, somewhere here. So this is my risk. This is my risk 1R. This is my risk. So accordingly, I can set the target. So what I suggested here is a fixed target strategy. One can use a trend following also. In that, what we will do after the entry, we will not put any target. We will trail with the Kijun-sen. So whenever price close below the Kijun-sen, we will exit the trade. The trend following has the advantage that with use of trend following, one can get a big move. One can utilize a big move and very big profit on a trade. But at the same time, we will be losing amount of gain. Suppose we are here, we are already in this much gain, but as we have not set up our target, when our Kijun-sen exit will come around this level, so we are going to lose this much amount of profit. So that's a positive side, and that's a negative side of trend following. So one has to select which one is most suitable for them. So I hope this concept is clear. Now we will see a lot of chart based on the same concept. Let me open up the chart. So first chapter, 1 minute. Okay. So this chart we will be discussing. So this strategy is mainly for breakout and breakdown stock. This strategy works on 15-minute, hourly, daily, weekly, all time frame. I have not tested below the 15-minute. So in front of me, I have a Bale chart. So let's discuss it. So here, Bale broke below the cloud. So start of the downtrend. So trend is a down. We are looking for a selling opportunity. This is the first time when Bale touched the Tenkan-sen and got rejected. This is the second time it touched the Tenkan-sen. Here one can see that it pierced through the Tenkan, but did not touch the Kijun. That means still trend is a solid, strong. So what we are going to do is swing low. So what is the closest swing low? So this was the swing low. So below this swing low, we will go short and see within few days, nice fall from a level of 55 to 45. Let's discuss one more chart. So now we will have a ICICI. So in front of me, I have a ICICI Bank daily chart. Here also, let's Let's understand the chart. Here price broke above the cloud. See, please understand, for any trading strategy, we require three things: trend, trigger, and trade management. 3T. Always remember: trend, trigger, and trade management. So first is to identify the trend. So here price is above the cloud, so our trend is clear, trend is bullish. Now we are waiting for trigger. So trigger is, so as I said, first time price touch the Tenkan-sen, bounce. Second time price touch the Tenkan-sen and bounce. That means there is a solid demand by the buyers. And during this both the touch, price did not even come close to the Kijun-sen. So here what we are going to do, after this second bounce is confirmed, we will look left and we will buy above the previous swing high, which is here. So this is our breakout trade. So above 480 there was a breakout trade and stock moved nicely toward 520. And see, this is this ICICI Bank is a large cap stock. If large cap stock can give us such a swift move, then you can understand how this strategy will work on mid cap and small cap. So I hope this strategy is clear to everyone. So what I'm planning to do, you guys can keep your question ready on this strategy. After webinar is over, we will take all the question one by one. Is that clear? So now let's move to our second part of this strategy. 1 minute. So now our second chapter is a Kijun-sen. Now this strategy is purely based on Kijun-sen. So in first chapter we talked about the breakout trade. Now our focus will be a pullback trade. So here the strategy is very simple. First of all, what is a Kijun-sen? So to make it simplify, one can consider Kijun-sen as a medium-term Ichimoku moving average. So it is nothing but 26 period high divided by plus 26 period low divided by 2. You know what exactly it comes out to be? It is a Fibonacci 50% level of last 26 period high and low. So that's a hidden advantage this Ichimoku system is offering us, that we get by default we get a Fibonacci level as well. So as I said, Kijun-sen is nothing but 26 period high plus 26 period low divided by 2. Now what I have observed is, after a breakout or breakdown, generally a solid trend will persist for a long time. So the trend will give us a multiple opportunity to take a trade in the direction of a dominant trend. And that's why this Kijun-sen comes very handy. So let's say we missed out the breakdown or breakout trade, then what to do? Then one need to wait for a pullback toward the Kijun-sen and take a trade there. This pullback trade gives excellent low risk, high reward opportunity. And here we will be going to trade only first and second pullback. Third pullback, okay, one can trade, but with a 50% lower risk. Let's understand this strategy with the chart here. So strategy, let me explain the first strategy. What is the strategy here? So okay, before going into the strategy, let me also explain the importance of a Kijun. So Kijun not only act as a magnet. Generally price try to move to Kijun after price travel away from the Kijun. It's a kind of a mean reversal. Whenever price travel away from the Kijun, after some time price will try to come back to Kijun. That's why those who use Ichimoku used to say Kijun act as a magnet line. Not only that, a slope or the slope of the Kijun also give a lot of insights. That means if Kijun is a flat, we can see from here, if Kijun is a flat, here one can see Kijun is flat. That means price is going under consolidation, and that's the beauty of this system. You don't need to look into the candles and come to the conclusion whether it is a consolidation or a trend. Just pay, one can understand this by just looking at the Kijun. If Kijun is flat, that means price is going under consolidation, and generally this consolidation phase followed by move a move a strong move, and that's what exactly happens here. This was a consolidation move, a consolidation phase, and then see a downtrend started once again, and once again in this region there was a consolidation followed by trending move. So that's the beauty of this Ichimoku trading system. So how we are going to use this? So as I explained, Kijun-sen is a nothing. Kijun line is nothing but the 50% Fibonacci level of last 26 candle. Now this last 26 candle, last Kijun-sen 26 period come from the Japanese calendar. This was when this Ichimoku was invented. At that time, there was a 26 trading days in Japan. So a lot of time I get a question from the trader. Now it is 20 days. So do I need to change Kijun setting to 20 days? Believe me, guys, I had tried it. But what I came to conclusion is that the by default 26 period works really good. When anything is really working good, it's not necessary to do the changes in it. So believe me, this default setting of 26 period is working very nice. No need to change it to 20 period. And this is the second most important component of the Ichimoku system after the cloud. So now let's understand the strategy. See, as I said, a flat Kijun can give indicate the consolidation zone. So this is the problem with the most of the trading system. Like most of the trading system based on the moving average and other indicator work really good in a trending market. But what when the market is in consolidation? So that is why I like the Ichimoku. Ichimoku gives you an indication, then boss, it is a consolidation phase, so better do not take trade in the particular instrument. So we can look for the another instrument, or we can simply stay out of it. Okay, so here is a strategy. First of all, for a pullback long entry, I will be discussing first of all the rule for the pullback long entry. A trading instrument shall be above the cloud. This is the first requirement for any long trend. We want a bullish trend. So first, a trading instrument should be above the cloud, and Kijun-sen shall also be above the cloud. A trading instrument shall touch first and second touch only and close above the Kijun-sen. So what happened here? I'm looking for a bullish trend. I want to use a small correction in bullish trend to enter into the stock, or let's say an instrument. Buy entry above the high of the candle that touch and close above the Kijun. So here stock or commodity should not only touch the Kijun, but it should also close above it. It means I need a bullish candle on Kijun-sen, and above the high of that bullish candle we will go long. Stop loss, same as the previously explained, stop loss can be put a few points below the confirmation candle. Target is 1x. First target is 1 hour, second is 1.2 hour, and third is the 2 hour. Same, let's understand this with the chart. So first of all, here we can see the price. Here, see, price is above the cloud, but not the Kijun-sen. Kijun-sen is still inside the cloud. In this region, price is already above the cloud, but Kijun-sen is still within the cloud. So this condition is not satisfying our first condition. Then on this candle price is above the cloud, and not only price, even Kijun-sen moved above the cloud. So this candle is satisfying our first condition. Now what we need to do is we need to just wait for a pullback toward this Kijun line. This red line is a Kijun-sen line. So one can see here, after the move, finally price gave a pullback, or I can say retracement. It touched it, price touched the Kijun-sen and made a one bullish candle. Please understand, we require bullish candle. If bullish candle is not there, then we will not take the trade. Why? Because many time what happen, price, let me many time what happen, price do not respect the Kijun-sen and price keep on like this, price keep on falling. That means we are getting red candles without respecting the Kijun, and that's why we require bullish candle to avoid such a false trade. So once we get a bullish candle which touch and close above the Kijun-sen, this candle is called confirmation candle. Okay, so above this candle high, I will go long and see the movement. Any strong trend, as I said, a strong trend remain in a trend for a long time. See, a trend started from this is in for longer time, but during this time, more than often it gives the pullback, and we want to capitalize that pullback opportunity. So this was the first pullback long, did well. This was the second pullback long, and that also did well. So that's how one can use a pullback strategy using Kijun-sen. The same way for the short, a trading instrument shall be below the cloud level and Kijun-sen shall be below the cloud. A trading instrument shall touch and close below the Kijun-sen. Sell entry below the low of the candle that touch and close below the Kijun. So let's understand with the chart. So here we can see it is clear. Price broke the cloud, nice strong downtrend, and here we get a candle that touched the Kijun-sen and closed below it. So below the low of this candle was a short entry. This short entry yielded nice result in next three candles. Same way, this is the second pullback. See, this time, let me show. One minute, guys. Yeah. One minute, just a minute. Can you guys see this candle pierced the Kijun-sen, but this candle was a bullish candle. So this was not our trigger. Even this second candle closed above Kijun-sen, but again this candle is a bullish candle. What we need is a candle that touch and close below the Kijun. That happened here. This red candle which touched the Kijun and close below it. So below this candle low is our short entry. So we will not blindly short at the Kijun level. We will wait for a confirmation that Kijun resistance is being respected, and see how nicely stock has respected this entry. Okay, so I understand this strategy is clear to all of you. We will look into more charts about the same strategy. Guys, keep your question ready. We will discuss the question later. Okay, so here is the chart of Bank Nifty. And let me tell you guys, this Kijun pullback strategy works really, really good on index. That means index means Nifty and Bank Nifty, and this strategy worked extremely good in all time frame, starting for 15 minute, 30-minute, hourly, and daily. So here we are. On this candle, price Bank Nifty broke above the cloud level, but at the same time Kijun-sen was within the cloud, so it was not satisfying our first condition. And see, that's the reason what happened. Price did not move up and corrected sharply. Actually, this was the point, this was the candle when candle 1 minute, this was the candle, this was the candle when price closed the cloud, as well as the Kijun-sen also crossed the cloud. So this here our first condition gets satisfied. Now I was waiting for a first pullback toward the Kijun-sen, and that happened right here. In this location, one can see that here one can see that after sharp correction, though it looks sharp correction, so what happened generally when such a correction happened in an index, most of the retail traders start believing that it's the end of the trend. But believe me, a strong trend do not bend so easily. It take a lot of efforts from a opposite side to really change the trend. That's why do not make mistakes that when first time when stock or index give a sharp correction, it is only a pullback, it's not correction. And that's what exactly happened here. After the sharp correction from 32,000, Bank Nifty took support at 31,000, which was precisely the Kijun-sen level. And there we got our confirmation bullish candle. So above this candle high was our long and trigger, and see how beautifully price move in next 2 days. So instead of chasing a stock when it is moving very strong in one direction, we can wait and take the advantage of this pullback where your stop loss is small and your target is really high. Let me open the second chart. Okay. That we already discussed. The second chart in front of me is a MGL. So in MGL, here the first condition met, price is above the cloud, and even a Kijun-sen is above the cloud. And see how nicely, so from 940 level, price MGL corrected till 870. So many was thinking stock has done, and now stock will correct it and it will go back to, general perception is that okay, from here it was resistance, stock corrected, now stock will go back to this level. That's what most of the retail trader thinks about it. But as I said, when trend is strong, this is a strong trend, strong trend do not bend so easily, it will give pullback. So in this zone many start believing trend is out, so they are taking the short entry, and there that's where they are being caught on the wrong side, and a few move in the direction will flush out all those short sellers. So here we get a nice pullback, sorry, so here we get a nice pullback at Kijun-sen, followed by nice move. So now here we already talked about the stop loss, how to place the stop loss based on one in 1 hour, 1.2 hour, and 2 hour. Second, you can also look left, and if you're buying here, You can look left and check swing high. At swing high, you can revisit your strategy. If stock or instrument is facing resistance at swing high, you can book partial and wait wait with a half position using the trimming stop loss. The advantage of doing that, if this swing high also taken out, then we can expect a sharp move in the same direction, and that's what exactly happened here in MGL. Swing high taken out easily, and that fuel even more strength into the prevailing trend. Same way, we got once again we got a nice entry. This was a second pullback. Here also we get a nice entry, and stock moved very well. So as I said, we will be trading only a first and second pullback, and we can see very clearly from the chart the price is above the cloud, this cloud. So as long as price is above the cloud, there is no question of taking a short trade. Absolutely no. Some guys may say, why? Because here also there was a shorting opportunity, price retraced, but we really don't know that price will retrace or not. So better go with the trend. So first fundamental, whenever price is above the cloud, never take a short entry. Just look for a pullback to go long. That's it. Same way here. You can see price is below the cloud. Forget about a long entry. Many may say, okay, from here, from this level, price give nice move. Okay, they give move, but still, what happened? Finally, what happened? There was a barely a pullback that this pullback get resistance from the Kijun-sen, and it broke that previous swing low. So that's the reason, if we are trading in the direction of the trend, a trader can improve 50% of trading result by doing this simple thing: trade in the direction of the trend. That's it. There are some strategy where counter trading is rewarding, but those strategies are only for intraday, and that required very strong trend management. It means you need a trader need to be nimble to take entry and get out within 1 or 1.5% movement. So that I will not advise unless you are comfortable and you are trading from the long time. So now let's move to next. Okay, so here is the short setup based on the same strategy: cloud pullback. Price broke below the cloud, start of the downtrend, strong downtrend, strong downtrend. Here there are two strategy can be used. Can we see here price touched the Tenkan-sen and got rejected. Second time price touched the Tenkan-sen and rejected. So as per our Tenkan-sen breakout strategy, one could have taken short at this level and see how it was rewarding. One more time it took resistance Tenkan-sen and see how nicely that Tenkan-sen breakout strategy worked out here. But here our focus is on Kijun-sen. So this was the location where first time price touched the Kijun and got rejected there. So below this candle low was a short entry that worked out very well. This was the second pullback that also worked out very well. Okay, and this was the cloud pullback. That strategy we will discuss later on. So in one chart you can see all the strategies in one chart: breakout strategy, pullback strategy, and long-term breakout pullback strategies. Don't worry, we will be taking some random chart and we will be discussing all the strategy in one chart. So don't feel these are the cherry pick charts and in cherry pick chart everything works nice. No, it's not that. We will take a few charts of your choice and we will see whether a strategy what we discussed works there or not. So okay, once again, this is the national aluminum chart. Here also, after After breakdown, price took resistance at Kijun-sen and again followed by nice fall from that entry point. Then here it touched the Tenkan-sen, got rejected. One more time touched the Tenkan-sen, rejected, and below this swing low was a short entry. That also worked out very well. So with this, I'm closing this Kijun pullback strategies. I have some backtesting result as well that we will be discussing later. Now let's move to our third strategy, and this is one of the best strategies, and this strategy gives excellent risk reward ratio. That is a cloud pullback trading strategy. So now before jumping into the strategy, let's try to understand a little bit about a cloud. So what is the cloud? The cloud is formed by a two component called a leading span A and leading span B. So what is the span A? Span A is nothing but Kijun-sen plus Tenkan-sen divided by 2. And the same way, span B is nothing but 52 period high plus 52 period low divided by 2. So ideally, span B is nothing but a 50% Fibonacci level of last 52 candle. So suppose you are using a hourly candle, that it means span B is giving you 50% Fibonacci level of last 52 hourly candle. Same way, if one is using a daily candle, then span B is giving us a 50% Fibonacci level of last 52 days. Now, why this system is a heart? Why this cloud is the heart? Because as I said, in all the strategy, cloud is the one which finally dictates the trend. As I explained, if price is above the cloud, it is bullish. If price is below the cloud, it is bearish. As simple as that. So now cloud is also categorized into two parts, bullish cloud and bearish cloud. So when we say bullish cloud, it means a leading span A is greater than a leading span B. So here one can see this above line, this above green line is nothing but a leading span A, and below a red line is span B. One can see that span B react very slowly, and there is a reason for that, because the span B is the biggest component, is a component that is considering the biggest data, 52. 52 is the biggest data in Ichimoku trading system, and that is why span B moves slowly, because it is taking consideration into the last 52 candle details. So here it is clear span A is greater than span B, so it is called the bullish cloud. Now cloud and cloud thickness also play a very crucial role. You can see here a cloud was red. After some time there was a twist here. So when twist happened, that means a trend is changing from a bearish trend to bullish. After the moment trend change, then after trend change, trend slowly get matured and it become stronger and stronger with the move. That can be seen here from the chart. Here is, this is the point where trend change from bearish to bullish here in this portion. So just pay attention. During initial time, the width of this cloud was the smallest one. And then slowly when price started moving up here, see, this cloud started gaining the thickness. That means trend is now turning stronger and stronger. So this is one more beauty of the Ichimoku. It not only gives you idea about the trend, it also gives you idea about the strength of the trend. If the cloud thickness is getting bigger, that means trend is getting stronger and stronger. And we all know the cloud is plotted in future 26 period ahead. That means this Ichimoku chart gives us idea about the future support and resistance. No any other indicator in classical technical analysis gives idea about the future support and resistance. So that here we get. Now how one can use this cloud thickness. Whenever cloud thickness is high and price touch that cloud, that means there is very high probability that price will get support, because a thickness is very high, that means the trend is really high and price will get support. So this information can be of a great help for a trader. So here what we are going to do in this, here what we are going to do, just like Kijun-sen strategy, we are going to use the pullback toward the cloud instead of a Kijun-sen. And okay, so here is one more thing. I'm going to talk about the other component of the Ichimoku and their correlation with the cloud, but that we will discuss later. When price cross the cloud, it is considered as a bullish, but the real bullish trend starts only when price along with the Chikou Span cross the cloud. So here it is clear from this chart. In this candle itself, price closed above the cloud. But look at that. Look at here. When price closed above the cloud, but the Chikou Span was very much below the cloud. So it was a bullish trend, but not the matured one. And that's the reason, see, price attempted to break out but failed. So real bullish trend will start when price moves above the cloud, and at the same time this Chikou Span also cross the cloud. This is the time when a real bullish trend will emerge. See, this is the picture in front of us. Just a 1 minute. I think this is a chart of Tech Mahindra. I traded this chart and I posted on Twitter as well, so I remember this chart. Here, see, at this point, price closed above the cloud, but at the same time, Chikou Span was well below the cloud, and see, price did not move from that point and corrected. So someone may wonder what happened. Price was already above the cloud, then why stock did not move up? Because the other component of the Ichimoku, which is Chikou, was not in line. Now, this was the point. This was the point. This is the point when price is already above the cloud, and even Chikou Span crossed the cloud. When Chikou Span crossed above the cloud, I call it free Chikou, and this is the sign of the real strong trend. At the same time, one can see that after this twist, now cloud is also getting strength. Cloud is getting thicker and thicker. And I can show you after this level, price has moved significantly upside. So that's a beauty here. So the same way, as I said previously, the cloud thickness play a really good role in identifying the strength of the trend. So when thickness is high, so at this point cloud thickness was very high, and see price got respected very well, and then it bounced nicely from the cloud support. And we all know From where it bounced for the span B, and we all know what is span B. Span B is nothing but the 50% Fibonacci level of last 52 candle. Now here one can ask, why price do not get respected here? When we look at closely, we can see that at this level the cloud thickness was really small. That means a strength was missing, bullish trend was missing, and when there is no strength, it was very easy for bear to penetrate and break this cloud support, and that's exactly what happened here. So this is how one can pay attention toward the cloud thickness as well. So here is 1 minute. So here is the actual strategy. Cloud offer one of the best low risk high reward pullback entry in the direction of a dominant trend. A pullback long trade using the cloud analysis. A trading instrument shall be above the cloud level before it pull back toward the cloud. Longer the time price remain above the cloud is the probability to respect the cloud support. What does that mean? Here one can see that price was above the cloud from long time, from this point till this point price was continuously above the cloud. So one can say, I can say here, price spent a long time above the cloud. That means this trend is a mature. This trend is there from long time, and whenever this such a trend is there, it is not easy to penetrate the cloud support, and that is why whenever after such a long mature trend, whenever we get a pullback toward cloud, do not miss this opportunity. Go long whenever you see such a structure. So, and that's exactly happened. Price touched and took support and make a new high. What is the psychology behind it is, let me explain the psychology. What is the psychology behind it? You know, when stock is in trend from the long time, stock generally give a deeper pullback. As we understand, when stock bounce from the Tenkan-sen, it means a very shallow pullback. Trend is very strong. When stock bounce from the Kijun, still it is a considered as a medium pullback, not that deeper pullback. But when stock bounce from the cloud, it is considered as the deeper pullback. So you understand three different system: Tenkan-sen, shallowest pullback; Kijun-sen, okay, medium pullback; and cloud offer the deepest pullback. So when this deepest pullback happen, it means price reached the cloud support after considerable retracement or after considerable counter trend. Trend was moved and then it reached. So men start believing that this is the really end of the story, and that's why they are wrong, and that's why one who really want to go long, or one who was really waiting for getting into the stock which was in the trend for the long time, can utilize this opportunity. Only problem with this strategy is this strategy will give you very less trade, but accuracy is really high, and your stop loss will be very low and reward will be very high, 1:3, 1:4. I have backtested this strategy for the index that I will share with you. So what is the strategy? A trading instrument shall be above the cloud level. We already discussed that. Okay, and this part about this strategy, in this strategy, we need not to look for any other parameter. We need not to look for Tenkan-sen. We need not to look for a Kijun-sen. Only and only cloud. So I can show you in trading view chart. So what I will do here, I will remove all other component. I don't need it. I don't need it. I don't need it. Plain vanilla cloud. As simple as that. Now see, this is only 15-minute chart. So here also, see, breakdown, okay, pull back toward the cloud, pullback cloud. So below this candle was my short entry. Nicely worked out. One more short entry and see how nicely it worked out. As simple as that. No any other component is required. Only wait for price to pull back into the cloud and take the entry. Same way, here it is giving pullback buy. So now what will happen? We will wait for price to close above the cloud, a bullish candle, and above this candle high we will go long. So let's watch out this trade in coming week. This is based on 15-minute. Let me check it on hourly. This is hourly. Price broke below cloud. We will not take entry here. We will take entry only near pullback. So this was the candle. This was the candle where it touched the cloud and got rejected. So we are waiting for a red candle. So here, let me 1 minute. So here, price broke below the cloud. We are waiting for pullback. No entry till this zone. But here, a candle touched the cloud. Let me zoom it. Here the candle touched the cloud, and then we are waiting for red candle, and the next candle was a red candle below this candle low. That means here was my short entry, and see how nicely it worked out. See, after this short entry, how nicely it worked out. So we saw 50-minute chart, we saw in 1 hour chart. Same way we can check on daily chart as well. In daily chart, price breakout above the cloud. Now I'm waiting for pullback. Here we got a pullback. Then price closed above the cloud. Here price closed above the cloud. So above this candle high was my long entry, and see how nicely it worked out. It is a nifty chart. Second time here again we got one more opportunity. Price touched the cloud and bounced right from the top of the cloud and made a bullish candle. So above this candle high was my long entry. So one can see here, look at here, one more pullback bounce worked out nicely. Here also price was above the cloud, bounce again, we bounce from the cloud, worked out very well. One more bounce from the cloud, worked out very well. Here also we bounce, and see after price bounce from the cloud, see the price action after that, a nice move in almost all the cases. See here, nice move here. After this entry, nice move. After this, nice move. After this, nice move. Same way, after this move, nice upside. Here also, look at this. Here also. So especially cloud bound strategy on daily chart on Nifty and Bank Nifty is working fantastically. It is also working superbly on hourly and 15-minute. Okay, so let's proceed further. The same way, for short entry, a trading instrument shall be below the cloud level before it pull back toward the cloud. Longer the time price remain below the cloud, higher is the probability to respect the cloud resistance. As I said, in this strategy, we do not require any other component of the Ichimoku system. Let me show this here. Short entry, let me look at this. So see, the base part about Ichimoku, from this simple chart, one can see what is the trend. Nifty is above the cloud, trend is up. Here, Nifty below the cloud, trend is down. As simple as that. Here, see, Nifty closed below the cloud, but we did not get any pullback entry toward the cloud. That's what I said. This strategy is excellent, but this strategy gives very few trades, and so this is most suitable for the guys who are working or who is having other business, and they are not one who take a lot of trades. They just want few trades in a year, but they want and they want to remain in the trend for a longer time. This strategy is best suitable for them. Or an investor who is investing in the stock for a long time, they can use this strategy. Instead of chasing the stock, buy them whenever it comes near the cloud and respect the cloud support, enter it and trail it. Here we have not received any short, cloud short. No cloud short. Let's check in smaller time frame on 1 hour. Okay, 1 hour. As I said, there was a short entry here. Okay, one more short here. Let's discuss it. Price broke below the cloud. Here, price touched the cloud, made a bearish candle. So below the low of this candle, here was our short entry, worked out nicely. One more time, price took resistance in the cloud zone and closed below it. So below this candle low was a short entry. That also worked out very well. And just like Kijun-sen strategy, we will be using first and second pullback only. See here, price broke the cloud, but did not move further down, and we did not get the pullback. And in fact, it saved us from the wrong short entry. Okay, so I guess it is clear from this chart. I have a lot of chart here. Let's discuss that also. So cloud. Okay, so I have a Kotak Mahindra Bank chart in front of me. It's a daily chart. This part about the strategies, it is very easy to identify. Here, Kotak was trading well above the cloud from the long time, almost from the entire month, and then it touched the cloud and bounced from it. So above this candle high, was a log entry. They worked out very well. This was a second pullback toward the cloud. We touched and closed above the cloud. So above this green candle high was a long, which worked out very well. Second is ICICI Bank. Price broke above the cloud, gave nice pullback toward the cloud, and made a bullish candle, which is a blue candle here. So above the high of this blue candle was a long, and that worked out nicely. This is the Sun Pharma chart. I remember I posted this chart on Twitter. So the base part about this cloud strategies, this cloud set, as I said, cloud pullback come after the deep pullback. So buying option is a really good strategy here, because during the deep pullback, generally pullback happen with a drop in volatility. This is so a deep pullback with a low volatility means option prices are really low. And as I said, in this strategy, if you observe, whenever we get a pullback, after pullback we get immediate strong trend observed in next 3-4 candle. You can once I hand over this chart to you, you can scroll and go through the all chart. What you will find interesting is after trigger we get immediately trend for next 3-4 candle. That means one can buy a call option here, because when you are buying the call option, entry play a crucial role, because you are trading against the time decay and a lot of other factors. That's the reason in option trading, option trading, especially on buying side, entry plays a really crucial role. But if you get a good entry, then option buying can give you a edge over a low risk very high reward, and that's exactly here. So first one can buy a neck call option. Okay, so when you buy neck call option, you should not worry much about your risk, because maximum risk is a premium paid. That's the one thing. The one, or you can go with a fixed risk strategies, like buying a bull call spread strategy, where you will buy where you can buy one at the money call option and sell out of money call option. That way you can combine a option strategy. Or you can do one thing, you can also go for a call ratio back spread. You can sell one in the money call option and buy two out of money call option. So there are different strategy can be used, uh, particularly option strategy can be used with this Ichimoku strategy, pullback strategy. Especially this strategy works really good on index. So one can try with index. You can buy the call option during the pullback, and if it is a short pullback, one can buy monthly. I would request you to go for monthly. One can buy a put option monthly, and you know you will see follow through in next 2-3 days itself. So here's a pullback short entry, cloud pullback short. See, after nice down movement, price started to move up and face the resistance right at the cloud. So below this candle low was a short entry. And as I said, the beauty of this system is after entry, immediately in 3-4 candle, stock start moving in the direction of the trend. So see, just after that entry, strong move in next 3-4 candle. And that is why I like this strategy to play a option, because in option, especially in buying option, you want after your buying, uh, move should start immediately. This was the second pullback, and here also see after a trigger move in next 5 or 6 days only we get big move, and that's the beauty about this strategy. And let me say one more thing. As I said, a strong uptrend start only when price also move above the cloud and Chikou also move above the cloud. This is evident from this chart. Look at here. At this location, price close above the cloud, but Chikou was somewhere here at that time. Chikou was still within the cloud. So this was not a strong uptrend, and one can see after this candle followed by a correction. But this is the point, this is the candle when price close above the cloud and Chikou also cross the cloud. And see, after that sharp move happened in the direction of the trend. So if you really want to go long, make sure price is above the cloud and Chikou also. So this is the really sweet spot to go long on the breakout. If you are a breakout trader, then you go long above this candle, not this candle. Again, LNT breakdown below the cloud, breakdown below the cloud, pull back toward the cloud, took resistance, and see when a stock like LNT, a large cap stock having a low beta, comparatively low beta, see here also this stock also gave nice movement in next 4-5 candle. So that's significant. When a company like LNT, which is part of Nifty 50, usually don't give much move, that these stocks also respect this strategy very well, and that is why I like this strategy. Okay, so we talked a lot about cloud pullback. Now let's understand one more important feature of the cloud is the how cloud act as a resistance. As I said, cloud, we discuss about cloud thickness. Now whenever cloud is a flat cloud, this flat cloud level act as a resistance. So let me show it here. Here can we see this portion of the cloud was flat, totally flat. So what one need to do, whenever you see a flatness, such a flatness for the longer time, just draw a line. And believe me, this line will be acted as a resistance in the future. And exactly same thing happens. Somebody may say, what make price to fall from this level? There was, if you check on price or only on candle, you will see there is no resistance at this level, 140. Then what made price to get corrected from this level? So that's where I said this cloud resistance from the flat cloud come in the picture. This is the flat cloud. I draw a line, horizontal line, and see. So this will help you to exit from the long. Suppose you are already long from here. So you should be cautious about this level. Or as I said, there are some contra strategy where one can take short. So this is one of the contra strategy when one can go short, but one need to be very careful when you are trading based on these strategies. And second thing, one can also see that here price was very much above the Kijun-sen. There is one more beauty of the Kijun-sen that I forget to mention previously. When price is too far from the Kijun, it is considered as a overbought. I again repeat, when price is too far from Kijun-sen, it is considered as a overbought, and buying at this level is not emphasized. And it is evident from this chart. Look at this price. Kijun was close to 115 and price was around 140, too far from the Kijun-sen. That means the Motherson Sumi was overbought. So I personally will not buy at this level. So what is the ideal situation? We know we can take advantage of pullback toward the Kijun and we can enter and see exactly that happened. Price corrected from this level. So in a nutshell, this Ichimoku also gives us idea about overbought and oversold condition. Same is true for the downside. Whenever price is too far from the Kijun-sen, better not to take any short entry because the risk reward is really stretched at this point. So flat cloud act as a resistance if price it is above the price, and it acts as the support if it is below the price, that we will see. Previously I said, as we discussed previously, it's not only cloud thickness also matters a lot. It is clear from this chart. Look at this. When price touched the cloud, at that time cloud thickness was really high. At this point, see, at this point cloud thickness was very high, so there was a high probability that price will get resistance in this zone. Next, see what happened. Again, price entered into the cloud resistance, but this time thickness of the cloud was very thin compared to the previous cloud. And as I said, when cloud is thick, it is easy for buyers to penetrate, and exactly the same thing happened here. Then one can see here, after just breaking the cloud, we get a nice pullback toward the Kijun and follow through buying happened. And one more thing here, one can see, look at the Kijun is here, price is here. There's a big difference between Kijun and price. Can I say it was at this point GMR infra was overbought and I should not buy it, and same thing happened after this price GMR got corrected. Again, as I said, during this point, at this point thickness was high, so there was very high probability of price to respect this support, whereas at this level thickness was low compared to a previous one, so there was probability of breaking the cloud support. As I said previously, we saw an example of how a flat cloud bottom act as a resistance. This time this flat cloud, a long flat cloud bottom act as a support. See, a long flat cloud bottom. So exactly what is it? It is nothing but a 50% Fibonacci level of last 52 candle, because this bottom portion is the span B. Span B, as I said, it's a 50% Fibonacci level of last 52 candle. So it acts as a support and it nicely worked out in this chart. One more example that we already discussed. Okay, and now one more beauty about the Ichimoku system is it also tells us about the trend. When we are seeing a lot of small and thin clouds, see this cloud and the length of the cloud. See, length of the cloud is very small, and look at the thickness. Again, small cloud and look at the thickness, and all cloud are within the range. That means this entire region is a consolidation. During the trend, what will happen? Cloud will move in the direction of the trend. Let me explain it. Here, see, cloud started moving up. That means trend is strong. So during the trend, cloud will move with the direction of the trend, and when cloud is not moving in any direction, see in this region, it is a sign of consolidation, and this consolidation often followed by a strong move, and that's exactly what happened in case of Torrent Power. There was a consolidation, long consolidation from January to June, and then finally Torrent Power break out on upside. Here again, one can see there are thin cloud of very small length. And when cloud is thin, it is very easy to penetrate, and exactly the same thing happened in this chart. So I think we are done with the cloud portion. Yes, we are done with the cloud. Now I have something interesting to discuss. Okay. Now there are a lot of guys who use a Tenkan Kijun crossover. What I found particularly that this crossover is not giving. I backtested this Tenkan Kijun crossover, and what I found is this crossover is not adding any value uh, or added advantage into the existing Ichimoku system. But I found one more thing, that instead of this Tenkan Kijun crossover, whenever a Tenkan and Kijun coming very close to each other, and a single candle that penetrate both Tenkan and Kijun is of use. That means generally what happens, it is, you can consider it as a similar to moving average. When long-term moving average and short-term moving average coming very close to each other, that means there is a drop in a volatility. That means there is a consolidation going on. So, and generally the volatility is a cyclic in a nature. Of Often a low volatility is followed by a volatility expansion, and that's what we are going to use in this strategy. So strategy is very simple. Whenever price is above the cloud and a single candle that touch both Tenkan and Kijun, then this candle is called TK convergence candle. So I can show you here bullish trend trigger candle, or you can get bullish trend trigger candle. Let me show you here. Look at this. Here price is already above the cloud, right? And this candle, this highlighted candle, look at this. This candle touch Kijun-sen as well as is touch the Tenkan-sen. So a single candle touch both the Kijun-sen and Tenkan-sen. So whenever this happen, we will take a trade in direction of the trend. So here direction is up because price is already above the cloud. So above this cloud, above this candle high, I will go long. Same thing happen here once again. This candle touch Tenkan-sen and Kijun-sen. Both. A single candle touch both. So above this candle high, I will go long. Only point is to consider many times what happen if candle size is too big, which happen here. Look at this candle size is too big and this candle touch both. See this candle touch Tenkan-sen here and Kijun-sen here. So single candle touch both component of Ichimoku. So above this candle high, we should go long. But here this candle, a single candle itself is very big. A candle of 4, 5 or 6% return or percentage move. So it is not advisable to go long above such a big candle. So better to wait for 50% retracement of this candle and then go long. Here in this candle we can straight away go long because this candle size is not that big. Generally after big candle we should not use high or low for the entry. Whenever there is a big candle, instead of high and low, use 50% level of that candle for the entry. This rule is common. These rules you can follow in any of your analysis. And see, as I said, here we want to utilize the expansion in volatility. So here there was slowly price was coming down, and after this candle again trend picked up. So that's how one can use this TK conversion strategy. 1 minute, let me clear all that. See here also one can see Bank of Baroda, this red candle touch both the Tenkan-sen and Kijun-sen. So below this candle low was a short entry. Though this would have resulted in the loss, but exactly this was the strategy. Then once again we got one more candle here. This candle, this red candle touch Tenkan-sen, Kijun-sen. So below this candle low was a short entry that worked out very well, pretty well. Here one can see this was the red candle touch Tenkan-sen and Kijun-sen. But as I said, we will take trade only in the direction of the trend. So here it is a short trade, but we are already above the cloud, so we will not take short trade because this is a contra trade. Trend is up, so I will ignore this trend. I will only take this. Now this candle, again this candle touched Kijun-sen, Tenkan-sen, a single candle touch both components. So above this candle high is my long entry because we are above the cloud, bullish trend, bullish entry. Here it was a short, but it was against the trend, so it is big no for us. Once again, Bata India, price is above the cloud, trend is bullish. This candle touch and close touch both the Tenkan-sen and Kijun-sen. So above this candle high was a long entry that worked out very well. Then this candle also touched Tenkan-sen and Kijun-sen, but this was a short entry, and we know we are already above the cloud, so we will avoid all short entry above the cloud. Berger paint. See why I said in this strategy we are utilizing a volatility expansion. Look left. Before this candle, look at price move. Stock was moving within very narrow range, and after this candle expansion happened and followed by a strong move in the direction of the trend. This candle touched both the Tenkan-sen and Kijun-sen and followed by nice move. One more example, Bajaj Finserv. Two candles are already highlighted. UPL. I hope it is clear. So I have completed TK conversion strategy as well. Now Chikou. Chikou is one of the most misunderstood component of the Ichimoku, but it is one of the really crucial component when it is used with the other component. Let me explain you. So first of all, what is the Chikou? Chikou, in simplest form, Chikou is nothing but a current price. Current price of the stock or commodity plotted 26 period back, as simple as that. So it is nothing but a line chart of an instrument placed 26 period back. So now, this is the beauty about the Ichimoku. In Ichimoku, your cloud is plotted 26. See here, cloud is plotted 26 period in future. Then you have a Tenkan-sen and Kijun-sen, which are placed at present price, and then we have a Chikou Span, which is placed in backward or in past 26. So a one chart gives you idea about the past, present, and future, all three. So you get idea about a past resistance and support. You get idea about the current support and resistance based on the cloud, based on the Tenkan-sen and Kijun-sen. You get a future support and resistance based on the cloud, future cloud, upper cloud and lower cloud. That's, isn't it fantastic? And that's the reason I like it. Now, generally, as I said, many times what we made mistake is a trader look at only price and cloud. So whenever price close above the cloud, he get the feeling that trend has changed. Yeah, it is true, trend has changed, but it is not matured yet. It will only mature when even Chikou Span cross the cloud. This is exactly what happened in this chart. Look at this, Havel close above the cloud, but at the same time, Chikou was stuck, and exactly Chikou, in fact, Chikou take exactly resistance at the cloud. So if I look at this chart, I could have taken short entry for intraday for 1-2%. I could have, because when I take contra trade, I limit my the target to 1 to 1.5% only, and I put stop loss 1%. So do not make mistake. Do not only look at the cloud, look at the Chikou also. So Chikou has a lot to offer here. Second, one more example, price was above. So somebody may think, what happened here? There is no resistance. If one look at the uh, price action, only price and candle, he can say there wasn't any resistance here. Then what makes price to fall from this level? So answer lied here. Chikou was facing resistance at the cloud. Okay. So when Chikou is above the cloud and above the price, then Chikou is called free. Here in second attempt, what happened? Price above the cloud, Chikou is above the cloud, but Chikou is within the price. You know what it means when Chikou is within the price, and as I said, Chikou is nothing but a line chart plotted 26 period back. That means when Chikou touch the price, it means Chikou at 26 period high. So at this level, Chikou touch, that means this is a 20, you don't need to check also. So this means price is at 26 period high. So I can say it is resistance, forget about this Chikou, everything price, see without drawing any tool, you can understand price at resistance. So at this level, two things happen. Chikou can cross the price, that means breakout above 26 period high, that one thing happened. Or Chikou touch and again started going back, that means price get rejected from the 26 period high, and this is exactly what happened here. Chikou touched the candle and started moving down. It means price touched 26 period high and got rejected. And this feature we are using in our Chikou Scoop strategy that we will discuss later. One more example. Price broke the cloud, but Chikou was still stuck inside the cloud. And one more thing I can write it here is, flat. I explained about the cloud flat acts at the resistance. So if you draw, see, this cloud flat base acted as a resistance. One more cloud plate was here. So this is also future resistance level. One more example, rejection. Okay, so we are done with Chikou, and now let's go to Chikou Scoop strategy. So now in Chikou Scoop strategy, we will not use other component. Okay, so here's the Chikou. Chikou is one of the most understood and underrated and misunderstood concept of Ichimoku system. Chikou is nothing but a line chart of a trading instrument plotted 26 period back. If Chikou is above the price, means instrument is trading above the 26 period high and vice versa. In this, what we will do, a trading instrument shall be above the cloud, pullback long using the Chikou. A trading instrument shall be above the cloud level before Chikou touch and go below the price. This means that price touch 26 bar low during that uptrend. Let me explain with the chart, then it will be more clear. See, price is already above the cloud. So first thing is clear, trend is a bullish. Here we will use only two components, cloud and Chikou. Trend is bullish. Now here what we want to utilize is when trend is bullish, I want to buy at lower level. So how can I get that lower level? It means, so what I will do, I will wait for this Chikou to touch the price. Here Chikou touch the price. When Chikou touch the price, that means current price is close to 26 candle low, and that is exactly happened here. It was close to 26 candle low here, and then I will wait for Chikou to cross above the price. So at this location Chikou cross above the price, and that precisely happened at this candle. So above this candle high we will buy and see what happened. That means we are using a 26 period value to go long in the direction of the trend. Same thing happened, second entry we got here. Look at this here. Let me draw it. Chikou, from this level Chikou started falling and touched the candle here, and this happened here on chart, because we know that Chikou is already 26 period back. That means in up, this was the uptrend. In uptrend, price reached 26 period low, and after touching it here, two things can happen. Price continue to go down. In this case, what will happen? Chikou will also go down, or from here we may experience the bounce. The price may go up. If price go up, that means Chikou will started moving up again, and that's exactly we want. After Chikou touch the price, it should move and close above the price. If that happens, then only we will take a long entry, and that's precisely happened here, and we got a long entry followed by nice up move. So Chikou is very handy here. If Chikou do not move above the price, and if it continues going down, that will keep us away from the wrong long entry. Okay, this is one more chart. Let me clear all this. Here price is below the cloud, trend is a down. We are looking for short opportunity. So see what happened. Chikou touched the candle. So at that time candle was here. It means candle reached 26 period high. Candle reached 26 period high, but the trend is down. So we will use this high to short. So I'm just waiting for Chikou to touch and close below the candle. So here it happened exactly, and this will happen here. So below this candle low was a short entry, and see how nicely it's worked out. Now many times what happened, this Chikou do not immediately touch and come down. Chikou may go up and it remain there for a long time, and then after Chikou come down below the price. That is also acceptable, but the base setups are those setups where Chikou touch the price and immediately get rejected. What happened here? This is what exactly happened. Chikou at this level, one minute. At this level, Chikou touched this red candle and immediately got rejected. That means we shorted here at 26 period high, and see nice down move. Sometime what happened, instead of immediately get rejected, Chikou may go like this, and after this Chikou come down. So this is also acceptable, but this one is the base entry when Chikou got immediately rejected. What is difference between this entry and this entry? In this entry, we are sorting at 26 period high, and here we are sorting when this kind of formation happens. That means we are shorting at 26 period low. But as we are in the direction of the trend, this strategy also gets rewarded. See here, this is happen here. What I'm talking is here. Here, Chikou touched the price, but instead of getting rejected, Chikou started moving up. I hope it is clear to you guys. Okay, so this is done. We are done with this strategy as well. What is the C clamp? Let's understand the concept of the C clamp. Okay, so see, as I said, Kijun can also help us to understand whether the security or instrument is overbought or oversold, and this can be done with the help of the location of the price with respect to Kijun. When price is too far from the Kijun, it is considered as the overbought, and it is a big no at this level. So what happened generally, you can see, one can see here Kijun and price is making a shape like a C clamp. If I draw with my pen, it is making like a C clamp. That means this is clamp bottom and this is C shape. Whenever you see such a pattern, it's better to avoid the long trade, because eventually sooner or later, here you should not buy, because sooner or later price will try to come back to the equilibrium level, which is the Kijun level here, and from here it will again start the journey. So whenever you see such a setup, do not go long. Contra trade can be taken, a short can be taken once price close below the Tenkan-sen here, below this candle. But again, it is a contra trade. If you are experienced enough, then only take this contra trade, else let it go. So this is called wait, let me clear all the drawing here. A lot of drawings are opened. So this is C clamp formation. Same is true. So just by looking at the chart, one should understand that we should not be in a hurry to enter the trade. So it's not only trend which is important, it is a trigger is also important, because many guys said trend is up so I can enter at any time. Yes, you can enter, but after entering, if you start seeing the loss before again that move start, it's that do not give good feeling. So why to enter at the location from where you see your portfolio going down 5-6% before it again start the journey upward? So better trend and a good trigger can give you peace of mind. So you will see a less drawdown in your portfolio. So that is the reason we use a pullback, because when you trade pullback, there is drawdown will be really low compared to buying the breakout. So that's the reason here again, when price is too far from the Kijun-sen, try to avoid going long and just wait for price to come to Kijun and then go long. So one can have taken long here, and see after a few days the same stock was available at a discount. So choice is yours. You want, if you are impatient and if you are ready to buy at any price, then be ready to get to see um, negative returns on your portfolio, or be a patient and wait for a correct entry and have a peace of mind. So this is done. Now type of the trend. As I already discussed this. So Okay, so as I said, when price is above a cloud, it is considered as a bullish, but a strong bullish trend is only when price is above the cloud and Chikou also above the cloud. This is shown here in chart with the point 1. This is the point 1 in this candle close above the cloud. So bullish trend started here, but at the same time Chikou was within the cloud. So it is a bullish trend, but mild bullish trend. Real bullish trend emerged at here when price and Chikou both closed above the cloud. Please remember, there is a difference between the bullish trend and strong bullish trend. The same way, see here, trend was bullish, but Chikou was stuck inside the cloud. So it was a mild bullish and get rejected. This is the beauty of the system. This is by mild bullish. Again, it is mild bullish. So if you want to go long, breakout long, then you should only go when trend is strongly bullish. It means price should above the cloud and Chikou also. Now this strategy, particularly this strategy is really useful on intraday using 15-minute chart. So suppose on Nifty you want to go long on 15-minute chart, let a candle close above the cloud and at the same time let Chikou also close above the cloud. Then above that candle of the high one can go long on 15 minutes. This is intraday strategy. Same is true for the short. Let me try if I can show you here. Okay, let's say here I will add in this strategy we record only two components, cloud and so here and we okay I will use a bar replay. Okay, but bar replay can only be done on daily. Okay, let's use the bar replay. Okay, let's see. So here okay, so look at here Nifty crossed the cloud, so bullish trend started, but look at the Chikou is still within the cloud. So bullish trend is started, but it is not strong enough. So I will not go long here. I will wait and let's see what happens. See what happened. Sharp correction immediately after that. Still second attempt. Here also we failed because Chikou was still under the cloud. Still third attempt again failed. Now let me stop here. Okay, so this was the candle where price is above the cloud and our dear Chikou also crossed the cloud. So this was the real trigger, this point. Now see how price action fold out after this point. Look at this. So it started, gave some good move and okay. Look at this. Here again we got a buy entry. Here we got a buy entry. It worked out very well. Move in the direction and then stopped out. So we might have captured 906 to 986, around 80 point. This this has captured this trade would have captured 80 point and then eventually stopped out on trailing stop loss. But the second entry happened here and 891, and see how it is going. Look at this. So 896, this entry would have again given around 100 point. Let me stop here. Here price again close above the cloud, but Chikou was inside the price. So again, this was not a long entry, but here exactly the long entry. This was the perfect long entry. Price above the cloud, and Chikou also crossed the price. And see how nicely it's worked out. So this is the beauty of Chikou. Generally, this strategy works extremely well on shorter time frame of 15 minutes on an hourly than on daily. So one can check, especially in index, if you're doing intraday trading, do check on 15 minutes. It works extremely well on 15 minutes, 30 minutes, and on an hourly. With hourly, one can do swing trading for 2 to 3 days as well. And see, this is our cloud bounce. See, took support, close above the cloud, and nice bounce. And this was the scoop also. Chikou, let me stop here. Chikou touched the price, went below it, and here Chikou again above the price. So above this candle high was a long entry. And see how nicely it worked out. So this was the scoop portion. And this was the cloud pullback. Again we touch. Again here, Chikou again touched the price. Now let's see what happened. Chikou cross the price or Chikou keep on moving down. If Chikou cross above the price, then we will go long. Chikou is not, yeah, so Chikou failed to close above the price and see the consequences. Now here price closed the cloud, but not the Chikou. Now here Chikou also closed below the cloud and see dramatic fall after the point where Chikou broke the cloud from this point. Prior to that, we broke here, but Chikou was inside and we saw sharp pullback. Chikou touched the price. Let's see what happened. Still within the price, still within the price. Now here was the short entry, but eventually we in next candle itself we got stopped out. Here again, once again, price close above the cloud, but Chikou gets stuck inside the cloud and see the consequences. Now see here Chikou touched the price and bounce, but at the time we were okay. Here once again buy signal, Chikou above the cloud and price was also above the cloud, and see how nicely trend emerge from that level. So I believe this is enough for you guys to understand the importance of the two component cloud and Chikou. Let's see. Okay. Scoop. Chikou Scoop, touch the price, close above the price and see. This was the nice entry few days back only. This Chikou Scoop give a long entry above 11,996, and still we are in the trend. Once again, Chikou touch one more scoop entry here and see one more nice entry, long entry around 12,138. and we within couple of candle we get high of 12,400. This time it touched but did not close above the price. See, okay, okay. So here it is all. Hope you guys understand all the concepts shared here. Now I am ready to take the question answer. Before that, I want to explain our trend following long trend following using the Ichimoku system. This Ichimoku system is extremely well trend following system. But let me tell you a pros and cons of our trend following system. Generally, trend following system has a very low strike rate of around 30 to 35%. But the advantage of a risk reward, trend following can offer 6:1 or even 7:1 risk reward. So if you are one who are ready to take a more losing trade, but if you have a patience to hold your winning trade, then nothing better than trend following system, and especially Ichimoku with a weekly chart. Let's say you are investor, then what you need to do is you need to follow a weekly chart and look for the candle which close above the cloud. Here only cloud. We will not focus on any other strategy. When a weekly candle gave breakout above the cloud, above that candle high go long. And as it is a trend following strategy, we will not keep any target. We will trail it with a Kijun-sen. Whenever price close below the Kijun-sen, this is Kijun-sen is acting as a stop loss. So whenever price close above the Kijun-sen, then only we will get out of the trade. Till then, we will keep trailing the stop loss with the Ichimoku chart. So here one can see a nice long long trigger was there around 500 level, and then after long exit come around 850 level. Then we got one more long here, and we immediately get triggered out within a couple of weeks. Then once again system gave long around this level and around 900 level, and that exit come around 1100. So this is how one can use a trend following system using the Ichimoku. The best part about this system is there is no if and but involved. It is complete system. You don't need not to know a complex pattern. You don't need to draw any trend line. You don't need to look any other indicator. A simple Ichimoku system is enough. But as I said, this system is having very low success ratio. Now the same system I tested for a on smaller time frame. What I tested was on 5-minute chart. I tested the same strategy on 5-minute chart, but on 5-minute chart, what I use, I tell you. As I said, that cloud bounce strategy worked extremely well. So this is a backtesting report for the same. See, this is a backtesting of the cloud bound strategy where we were using only cloud and we were taking long when instrument or security touch the cloud and close above it, and prior to that it was trading above the cloud. So that strategy you can once again go and look into it. So this strategy has generated total 62 trade. Accuracy, look at the accuracy, 48% of the time it got profitable. And what I have done is I have exited after 4 candles and see the risk reward, and fixed stop loss was placed after entry. A fixed stop loss of 1% was placed and exit after a 4 day. So I was not keeping any target after the entry. After 4 day at closing price I will get out of the trade. and my stop loss is fixed 1%. So look at the risk reward. Against 1% loss, we are getting reward of around 3%. So if somebody is trading with, and the base part, we are exiting this position in next 4 days. Okay, so base part, someone can buy the option, and you know within 4 days you are supposed to exit the position. So this is really good with the option, provided in 4 days the strategy on average is giving a return of 2.82%. So assume you buy a in the money call option and your average expectation is around 3% in 4 days. It means it can almost more than double the option price if you're buying in at the money or in at the money option. So in Nifty you can assume, on conservative basis, you can assume a 200-point rally in 4 days. So 200%, 200-point rally. It means if you're buying at the money option with a 50 delta, it means you will get 100-point rise against a 200-point move in the Nifty. So if you're buying in the money call option, generally one can get around 100 or 120 rupees in the beginning of the series. That means you are getting 100-point rise on 100. It means almost double the appreciation. Again it depends on when you are taking the trade. At the middle of the expiry, you will get this option even cheaper. At the very close to expiry, even cheaper. But I will suggest you should keep a select the option minimum 10 days, should have minimum 10 days of expiration. So this strategy, the only problem with this strategy is the number of trades are very less. Let me show one more strategy, backtesting. What is happening? 1 minute. Then I had a backtested a simple strategy. Okay, this is a backtesting strategy of using the 5-minute. This strategy is even simpler. I will buy whenever price cross the cloud on 5-minute chart. Whenever candle close above the cloud, above that cloud, that candle high, I will go long. The reason is in my system I cannot put Chikou and do backtesting, so I need to keep it simple. The simple strategy I had tested for last 1 year is I will go long whenever Nifty close above cloud on 5-minute chart. Target I will not keep it. Stop loss is a low of the cloud is the stop loss. So I will trail as long as price move in the direction of the trend. When price goes below the cloud, I will square off my long and I will take one more short. So we will always be in the trend. Long short, we will always remain in the trade. So this is the backtesting result of this strategy. In a year, we get total 62 trade. No, I think no. This is for cloud bounce. Let me check. Yeah, 5-minute strategy is here. Okay, so 5-minute strategy, we got total 361 trade we got in the last 1 year. The accuracy, as I said, it is a trend following strategy. Accuracy was low, only 35%. But look at the risk reward. The average profit was 0.83% against the average loss of only 0.26%. So I calculated the entire year result, and in entire year this strategy has generated 4,888 Nifty points. Let me tell you, the biggest contribution come from Nirmala Madam's candle also, because that day we got a long and we got straight away 400-500 point. So this is the beauty of the trend following. In trend following, even 1 or 2 or 3 a good trade can give you really big winners that will compensate for a loser, as well as it will always keep your portfolio on a green side or on profit side. But at the same time, trend following will have a lot of response, losing trade. As one can see here, a maximum continuous losing trade was 10. So one should be ready for a 10 consecutive losing trades. So that this trend following strategy is giving excellent result, but it is required at the same time the mental psychology of a trader to follow it, because it has a very low success ratio and there will be consecutive losing trade as well. But what I believe, if one trade one or two lot, let's say you have a 3 lakh in account, just trade one lot which of Nifty, which required around 1 or 1.2 lakh of margin, and keep 1.8 lakh as a buffer and trade this strategy, because those buffer money can be used during a drawdown. And when you have already, and then when your strategy start building money for you, you can use the same profit to use during the drawdown. But in nutshell, this strategy look really promising. The only drawdown is a low success ratio and ability to hold for long winning trades. Now this strategy can also be improved with our version of Chikou. So one can do not buy when 5-minute candle close the cloud, and at the same time Chikou also cross the cloud. By doing this, I'm pretty sure the accuracy will also jump up from 35 to even higher level. But as I said, in my system there is no provision to do that, so I could not do that. But yes, one can check manually and do it. Same time, I also backtested the same strategy on 15-minute chart. That was also amazing. On 15-minute chart also, the strategy works excellent, and the point gain was in a range of around 2000 to 1800 for Nifty. That is also pretty good result for this strategy. This strategy even work good on hourly, but I would like to restrict for 5-minute and 15-minute, so one can do backtesting from their end. So with this, I want to conclude from my side. Now what I will do, I will take question and answer, and then we will conclude this webinar. So guys, I'm taking break. Meanwhile, you guys can put your question and answer here, and then I will answer you one by one. I'm just taking 5-minute break. By that time, you guys start putting your queries in chat section, and we will look into it one by one. Hi guys, so let's start with the question and answer. So first question is from Gautam. Why do not go short as soon as price rejected from the Tenkan-sen at the first time itself? You know what happened, Gautam, when price get rejected from first time, it is not enough signal. I want to, we want to see the commitment of the uh, market participant, and for that reason we need to see their commitment more than one time. I can explain you that with the chart. So we when multiple time price get supported from Tenkan or rejected from the Tenkan, it gives a better idea that our understanding is really clear, and that is the reason I look for a two touch at two touch or two rejection at the 10K. In Bank Nifty chart, Kijun chart holds good for 10K Saturday. Yeah, that if you look Ichimoku chart as a whole, you will find a lot of strategy described in this webinar. You can see in one chart itself. uh, Between the Tenkan and Kijun strategies, Tenkan we wait for the swing high and low to cross, and yes, exactly. So Tenkan strategy based on Tenkan-sen is basically a breakout strategy where we are buying on break of swing high and shorting below the swing low after strategy confirmation, whereas the Kijun-sen and Cloud are a pullback strategy. So that's the difference. One is a breakout strategy and one is a pullback strategy. Sandrock, if a price is taking support at the cloud upper boundary in a bullish trend, and then how we identify it will cross the cloud. As we know that when the cloud is in flux, it will broken easily. Yes, Sand and Sandrock brother, that's the reason I said when it takes support, that support itself is not enough for us. We want a bullish candle at that support, and that bullish candle high should be taken out. And one more thing is I trade only first and second pullback, and that I had I had come to conclusion based on my own trading and my own experience that first and second pullback, generally the first pullback at cloud result in a profit 70% of the time. Second pullback is also a good opportunity, but then after third pullback, I really don't believe on those pullback. So cloud flux, okay, but I request you to go back and check whenever the first pullback come at the cloud, and price should close above the cloud, and that high should also taken out for our entry. Like here, like here, I will not go long because future cloud is bearish. But when the price was around this level, the future cloud was also bullish. So it was synchronized with our overall trend. And also currently ICICI has given something like this. Let me pull the chart of ICICI Bank and look at it. Yes. Okay. See, ICICI Bank, this was the first pullback and this is the second pullback. Okay, sorry. This was the first pullback at the cloud. One can see. This was the second pullback and this is third pullback. So as I said, I will not trade third pullback. And look at this, during this third pullback, this future cloud is bearish. So one can skip this trade, but this first pullback and second pullback worked out very well. See, first pullback after second pullback, the long was around 530, and within 2 days, price moved from 530 to 545. 3% move in a large cap stock is a not small thing. And then we got one more candle This candle also touching the cloud and close above it, but the high of this candle was not taken out, and we saw a correction then after. Again here, but as I said, this is the third pullback and I will not use third pullback for entry. Okay, Senkun's Span B pullback. Even for Senkun's Span B pullback, I wish to see, even if price takes support at this lower level of the cloud, which is a Senkun's Span B, I want to see price going above the Senkun's Span A to go long. I'm not in favor to take long when bullish candle appears at the bottom of the cloud. When will you exit taking trade after pullback? I already explained there is a two-way. In fixed, I put a fixed target. Target I already explained. It's a 1 hour. First target, 1.5 hour is the second, and third target is 2 hour. If you are getting out at first hour, strike is really good, accuracy of success is really good, and 1.2 and 1.5 and 2 are your strike may come down, but it will give you a more amount of profit. So you need to bear this in your mind when you are selecting a profit target strategy. Second thing is, I already explained that one can go for trend following. So instead of putting any target, let your trade to run in the direction of the trend. If it is a long trend, you should carry the long trend until the price close below the Kijun. In case of a Kijun pullback, in case of a Tenkan breakout, trail the trade until the price close below the Tenkan. Let me explain if I can explain from here. Let's say, okay. Let's say, okay, here we can see, okay, so here we can see at this point price touched the Tenkan. So first pullback, this for second time touch the Tenkan. So above this swing high, so above this swing high, so above this swing high, I will go long. Now what I will do, I will not put any, I will not put, so above this swing high, I will go long. I will not put any target. I will trail with the Tenkan-sen. And whenever price goes below Tenkan-sen, I will go out. I will scale up my position. Or in conservative, if you are taking trade for a long time, you can trail with the Tenkan Kijun-sen as well. In a cloud pullback, the color of the cloud field, suppose the price is bouncing off and breaking out the green cloud. No need to give importance to a color of cloud. No need. Like here, ICICI Bank bounced from a bearish cloud. So no need to give importance to the color of the cloud. Only bounce from the cloud is in. Likewise, you can see, so it is pretty clear that cloud is of importance, not the color of the cloud. There are two lines in cloud. Should be the proud bounce off from any price can bounce from span A or span B, but generally in a strong trend, generally in a if a stock is or instrument is in a strong trend, then it will often bounce from the span A in case of the bullish trend, and in case of the bearish trend also you will find the bounce off from the span A. If security is bouncing from span B, in that case also it need to close above the span A. Like here, ICICI Bank come very close to a span B. So I will not go long here. I will go long only when this candle which close above the span A. Otherwise, within this cloud is considered as a consolidation zone. So I'm not interested to take any trade in this consolidation zone. So even if price gets supported at span B, it should eventually come out of a span A to qualify for the long entry. Backtesting result again. Okay, for 5 minute strategy, I can explain you this 5 minute strategy which I was talking about. So 5 minute strategy, what I was referring is simplest form. In 5 minute strategy, what I explain, I use only cloud. So strategy is pretty simple. Whenever price close above the cloud, that candle high should be used as a long. So here, this candle close above the cloud, but this candle high above this candle high was a long entry, but that did not fill. Then here we got a long above this candle high, we got long, and my stop loss immediately below the cloud low is my stop loss. So here, let me see. So the long was around 517 and my stop loss was around 511. Okay, so I will hold as long as price do not close below the cloud. So here price never close below the cloud, so I will keep on holding, keep on holding, keep on holding, and there is no target here. Keep on holding, keep on holding. So I am long from 511 level. I'm still long, I'm still long, I'm still long. Okay, here price close below the cloud, so here I will get out. So long at 511 and we are out at 537. Now here I will square off my long and I will again go short below this candle low. 536 is a short, 536 short. The stop loss is 542. Go this cloud high, short, 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 short. See, still we are under the short trade. So this strategy I explained for Nifty and Bank Nifty. This can be used for other F&O stock also. This strategy can be fine-tuned with the use of lagging span. As I explained, go long when price is above the cloud, and at the same time lagging span is also above the cloud, and vice versa. So this strategy can use with both 5 minute and 15 minute. Do we need to check Chikou Span? No, no need to check Chikou Span in PK convergence strategy. Please show some recent trades that you have taken. Recent trade I have taken was a short trade. I will post in our a few of the trade I already post in our Telegram channel, and for further more chart I will post where I have already taken a trade. Last trade I remember I take on 1 minute. That was a trade Tech Mahindra. Nowadays I'm trading in currency more, so I took a Tech Mahindra long, swing long on daily chart. I already explained I took long somewhere here. This chart I posted on Twitter as well. Around this level, around I remember, if I remember correctly, it was, yeah, it was around 734. It was the level 734 when price broke above the cloud as well as the Chikou Span here. So this trade I took and I closed somewhere here 762. In Nifty chart, we shorted below the cloud on the pullback and price gets nice fall similarly on the long side, but where to book the profit on those release? As I said, the profit can be booked on two way. First is one are as I already shared in the write up. It is already written how to put the stop loss. Stop loss should be few point. Let's say if you are taking a long using hourly Nifty chart, then the candle which trigger your long, below that candle low, put some buffer, and let's say, let me explain here with the chart. So let's say here we take a short below this low, we took a short. Okay, so the short level was 12,113. What is the high of this candle? 12,164. So almost you can put few point buffer above this. So let's say 5 point buffer. So 12,170. So 12,170 is your stop loss on long side, and your trigger was 12,011. So almost you can say you have a stop loss of 16.60 point. So your first target should be a 60 point from this level. That is achieved very well. So when it achieved, you can book the half position. Then book second half position, second 25% of position at 1.5 of your risk. It means at 90 points. 90 points from your entry, and the rest 25% you can book at 2 hour. It means 120 point. That way you can do, or you can get out entirely at once, or you can trail based on ATR or any other thing, or you can trail based on the Kijun also. I can put here, let me put, or you can use the Kijun. So this is the Kijun line. Use the Kijun as a trailing stop loss and trail it, and when price close above Kijun, get out of it. I already mentioned in the strategy the consecutive. There was a 10 trade that consecutively went into the loss. A maximum drawdown. Unfortunately, in my system, I cannot see the maximum drawdown in percentage like MB Broker. So I'm really sorry, I cannot tell about it. But you understand, maximum consecutive losses were 10 trades, and average loss was around 0.28%. So you can roughly consider on safer side, considering the slippage and everything, that the maximum drawdown was around 3 to 4%. That's what you can consider. Color is not that important during the crowd pullback. The graphs. In one more Tenkan-sen start Kijun-sen, we get entry very late. If we follow Chikou above the cloud and price, we can get longer. Yeah, see, there are many people who believe that Ichimoku give a late signal, and I agree with that. The Ichimoku give late signal in almost all the cases, but it only gives signal when trend is mature. So but I have seen a lot of people who successfully buy at rock bottom, but eventually they sell their position when they see 4 or 5% of appreciation. So what is the fun if we cannot hold our position uh, for a long, when we are for a longer period, when we bought at a really rock bottom? So what I believe, it's not where we get signal, it's about where we get more accurate signal. And that's the reason Ichimoku give late signal, but the signal quality and accuracy of signal is pretty high compared to other. Yes, you are right, you will get little early signal, in case of the cloud breakout using the Chikou. Another way to reduce it, you can use the multi-frame time analysis. Like, see, I can explain you this. Like right now, in in 1 hour chart, Nifty is trading above the cloud. That means our trend is confirmed. Trend is bullish. So I will not go for any short trade unless Nifty start moving below the cloud on hourly chart. Now I will use a smaller time frame to take entry. Let's say 15 minute. So on 15 minute, whenever price close above the cloud, immediately I will go long. Why? Because on longer time frame of hourly, I am already in bullish trend. So this way you can use a multi-frame time analysis, and here you will avoid all the sell signal in smaller time frame as long as your longer time frame is in bullish trend. Understand? Or same way you can use a Kijun-sen pullback in smaller time frame. Here we already know in a longer time frame hourly Nifty is in bullish trend. Then wait for pullback in Kijun in smaller time frame and use this opportunity to go long. One could have go long at this location. Okay, Reliance pullback failed. Let's check the Reliance chart. But as I said, we will be using only two pullback. We will not use all the pullback. First and second pullback only we will be using it. Let me go on daily chart. Yes, in Reliance, pullback has failed. True, and obviously the strategies are not 100% true. That's the reason we required stop loss, and as I said, trend trigger and trend management. That's why trend management is of prime importance here. Reliance cloud pullback failed miserably. I will say it's failed miserably. Yes, you are right. Okay, when price is inside the cloud in a longer time frame, better to avoid it, because generally a trend is dictated by a larger time frame, not a smaller. Because in smaller time frame, you will often find somewhat smaller time frame often trend in all the market. So better for the trend identification, better use a longer time frame. So in longer time frame, let's say in daily, if price is within the cloud, better avoid those stocks. Yes, price do respect Tenkan and Kijun on 15 minute. I have not tasted on 5 minute. Especially on 15 minute, price respect Kijun a lot, not a Tenkan. It does not respect Tenkan much, but on 15-minute time frame, price respect Kijun very nicely. Stop loss on the cloud breakout. As I said in a backtesting result, which I shared with you on Nifty and Bank Nifty, my stop loss was fixed 1% from the entry point. So let's say, let me show you here. So stop loss can be used 3 times. Suppose you are using this cloud strategy with the stocks, and if these stocks are Nifty 50 or large cap stocks, then you can use the 3% fixed stop loss from your entry. The reason is, what I believe is, after cloud pullback, the move come immediately, and if it does not come immediately, then there is a very high chance that uh, the trade will go in the loss. Same is the case. One can see the same in Reliance. After cloud pullback, here cloud pullback, immediately within 3 days, stop loss got triggered. So if you have placed 3% of stop loss, it could have saved you from the bigger losses. So that's the advantage in cloud pullback. So put 3% stop loss for the large cap stock. For mid cap stock, if you're doing positional trading, put 5% stop loss. And if you, suppose you are using hourly chart, and if you are doing day trading, so for day trading, for any strategy on stock, your stop loss should not be more than 1%. In no case your stop loss should be more than 1%, right? For day trading, the same way, suppose you are doing BTST or 2-3 day trade for 2-3 day, then in that case your stop loss should be conservatively 2%, irrespective of your any strategy. But if you're buying a stock in cash for, let's say, small cap or something like that, then you should have a decent amount of stop loss. So one should not stock out prematurely, because small cap, the volume of the stocks are low, so they tend to give more volatile moves. So you should have a buffer of, let's say, 8 to 9% of stop loss. That is why I preferred to trade with the large cap F&A stock where volume is very high, so I can trade with them with a smaller stop loss. Eventually we want to make money, so we can buy stock in cash, or we can go with a future in the large cap stock with a smaller stop loss. And I would better suggest, if you are a new trader, then even don't go for a stock future, only go for index futures, because index future gap down and gap up and gap down risk is comparatively less uh, than a stock. And even one can look for the commodity, where commodity, apart from crude and natural gas, one can look for silver, gold, copper, where gap down and gap up risk are comparatively low. It should be cloud high or low at the entry point. No, I already explained the stop loss. It shouldn't be cloud high and low, because many times, if you are using a daily chart or weekly chart, stop loss based on cloud high and low will be really too big. In currency, in forex. I'm using the Tenkan-sen Kijun bounce strategy and cloud pullback strategy on hourly time frame, and it is, believe me, it is working pretty well. So in currency, especially in forex market, in currency and forex market, I really avoid taking breakout trade, because they are, trying to give, they are more prone to give pullback. Even one can use the USD INR, go with a 30-minute chart, and use a Kijun-sen or cloud pullback strategy that work pretty well there. Yeah, Rajesh, if you are using even on hourly, use first and second pullback only. And as you said, you are a day trader. Once you utilize first and second pullback, go with other stock, because trading third, fourth pullback carry higher risk. Do you guys want to check any particular chart? We can look or chart. We can take the example of chart and we can combine everything. Okay, C clamp. Okay, C clamp. Sorry for that, I missed out your. So C clamp is nothing but what happened in C clamp. C clamp. Okay. Current by. Okay, so we will take three. We will look into three charts: Sun Pharma, Polycab, and GMM. So okay, C clamp. So in C clamp, one can see Kijun is almost flat in this level. This is the Kijun. What happened here? Anyway, so Kijun is almost flat here, and see price is too far from the Kijun, and slowly price is coming down. So is it making like a C shape? C shape, kind of C clamp. So this pattern look like a C clamp. That's why the name comes as a C clamp. So in C clamp, the first identification is price should be too far from the Kijun-sen. And when price is too far from the Kijun-sen, that means it is considered as the overbought. So what strategy one can use here is that one can use a counter trend strategy, because we all know the Kijun-sen act as a magnet. So when price is too far from the Kijun-sen, eventually it will come to Kijun-sen. So see here that exactly happened. So one should go short when price close below the Tenkan-sen. So here price close below the Tenkan-sen. So below this I will go short and I will book profit with 2-3%, or one can even wait for a target to reach at a Kijun-sen. So this is called C clamp. Its look is like C clamp. I hope I answered your query. Okay, let's look at Sun Pharma. See, we will see how many strategy we can find out from the Sun Pharma. So first one which is visible from the chart is a cloud bounce. See, here price moved nicely above the cloud. So the trend was bullish, it is confirmed. Then here is this candle, price touch and close above the Kijun. So above this candle high was a long, but that never triggered. Our long never triggered because on the next day price did not cross above the high of the candle. And see, there was a correction. But still we are not into the trade because we missed a long entry. And this candle also is a TK convergence candle, because this candle touch both Tenkan and Kijun. No, I think I'm missing something. Yeah, yes. See, this candle touch both Tenkan and Kijun, but again here also trigger was missing because our trigger was above high of this candle. Then what happened? Then we got a cloud bounce. Here this candle touched cloud but failed to close above it. But in next candle, this next candle touched the cloud and closed above the cloud. So this candle satisfy our cloud bounce strategy rule. So above this candle high was a long here, and see nice move in. After that entry, price has never looked back. Here again one more time price touched the Kijun, but we did not get a bullish candle. See, we are saved from a wrong long entry. Now here right now what is happening? Price broke the cloud and taking resistance as a cloud. So below this candle low is a short entry. So remember this level for future. Below 423 is a short entry because price is below, and here one can see a candle close below the cloud, but still Chikou is within the cloud. So I can say it is a bearish trend, but not the strong bearish trend. And look at the cloud thickness is also not much. So I can say from the chart that the Sun Pharma is in mild bearish trend. It is not in strong bearish trend. And see, Sun Pharma, I already discussed about the smaller length of the cloud. So Sun Pharma is in consolidation zone. See, the length of this cloud is very small. See, this length. The length of the cloud are very small. This was a little longer period of the cloud. Otherwise, the cloud, and look at the location of the cloud. Cloud is not moving up or not down. It is within the same line. Here it was a trending move, where cloud was moving down with the price. Polycab, let's look into the Polycab. Okay, so can you guys spot? I request you to spot a strategy here on Polycab. There was a long in this zone. Yes, Tenkan breakout long was there. Yes, here first time price bounce for the from the Tenkan, second time bounce for the Tenkan. So above this previous swing high. So here somewhere here. See, so above this swing high was the long, and see how nicely this strategy has worked. Kijun-sen, okay, and one more is there. Can you guys check this out? This candle, touch and close. This candle, TK conversion candle, perfect. This was a TK conversion candle, and see that worked out well as well. And here it was a bounce, cloud bounce. Mm, cloud bounce strategy was here. Again cloud bounce here. It is working out nicely. Perfect. So you guys are getting the most of the concept here. And the last chart I will take about GMM. Did you guys check? There was one more. Chikou Scoop. Chikou touch here at this level and bounce. So Chikou Scoop strategy was also here. This level. At this level, there was a Chikou Scoop. Let me make it clear by hiding all other components. Now can you see Chikou Scoop here? So eventually the long was somewhere here. How can we check? From this candle 26 I will go 26 bar. Okay, so here was the long entry. This she could touch the price and close above it. So here there was a long entry as well. Yeah, so I will take last trade GMM. Guys, you tell me what are the strategy and signals. GMM, Kijun pullback, long here, and see. Second, Kijun long here. Perfect. TK also here. Then cloud bounce here. And I said, as a trend following strategy, one could still trail this stock with the stop loss of this Kijun. Yes, Tenkan breakout also. So I'm happy to know that most of you guys have understood the concept. These are a little difficult to digest at first. So slowly and steady, you guys will get more acquainted with this concept. We will keep on discussing on our Telegram group. I will share specially Nifty charts weekly. I will always every week I will set Nifty chart, and mainly I use 30-minute chart. I will keep on sharing on our group, and this will help us gaining a more grip on this concept. So lastly, let's see Nifty, and then I will close this webinar. Yeah, Nifty. Nifty, as I said, is above the cloud, but a, a future bearish Kumo or cloud is giving signal that we may see some correction before a Nifty start upward journey. So at this stage, for long, big no for long from my side, because see Chikou is already below the price. Chikou is already below the price. Price is within the cloud, and let's see how it's looking on hourly. Uh, I take brother Nagaran. I generally trade in forex, so it's difficult for me to post the trade there. But uh, strategy backtesting cannot be done in free. Generally, this backtesting software are paid one. One can use MB Broker, or if you want to do a free backtesting, you need to do sit and do the manual testing, looking at chart, put your trades on Excel sheet. That's only way to do. See on hourly chart, though price has crossed the cloud, Chikou is still within the cloud, and Chikou is facing the resistance. So I am expecting price to pull back toward this cloud level. Let's see what is the cloud level. Yeah, so I'm expecting price to fall to this level, which is cloud flat, can act as a support 11,940 or something like that. And here one can see there is a flat cloud top which can act as a resistance, which is the level of 12,255. So keep this in mind. This level, this flat level was hold for the longer time. So there is a significance of this level. So whenever Nifty reach around 12,255, please pay attention to this level. So guys, with this I'm concluding. Brother Saran, I need to close now. Chikou inside the price means Chikou within a candle. Yes, Saran, you're absolutely right. Chikou within a price means Chikou is within the candle, and Chikou above, like here. Right now, see, Chikou is above the candle. It means Chikou is above the price. It is considered as a bullish, but uh, when it is above the price and above the cloud, it is real bullishness come into the picture. Thanks a lot, guys. Now I need to conclude. Uh, I will store the recording. Recording itself will take a couple of hours to get uploaded on our system, and within 2-3 days, maximum by Monday or Tuesday, you guys will get a recording. Plus, you will guys get the write-up and all the charts, annotated charts, which I shown throughout this webinar. You will get all those chart also. So no need to even after this webinar, you guys no need to go to entirely webinar. Just look at the chart and annotation about the chart, and you will get the fairly idea. And we are open to discuss any query in the group. So thanks a lot for every one of you to patiently listen me. Thank you and have a nice weekend.